Ooh. That's a change of the seasons right there. That's how you know we're getting into the summer months. Coming up. It's like your first hint at it. Cold fronts are gone, and now we're going to get that afternoon rain. Oh, it really is cold front coming? Oh, how about that? Hey, welcome to the closing beat, everybody. Happy Thursday. How you doing? A little technical glitch there, so there's no side screen for you. But welcome to our show here today. We talk about the stock markets. We're financial advisors that actually pay attention to the stock markets. Not very good at golf and other things that advisors do. But they're not all bad. I'll say they're not all bad, but I've met a lot of them that really dislike what we're doing here, and that's unfortunate. But one of the things that we like to do is on Thursday nights, Wine and Wealth. So coming up later, we'll do a class called Wine and Wealth. Come and have a glass. I took all the wine. So grab a glass of wine or your favorite drink or whatever it is, and come hang out. Tonight we're going to talk about changes to our large cap fund. We have essentially gone shopping, so we've made some changes there. I want to go over those. I like to update clients on what we've done because we manage our own funds. We don't actually buy ETFs or mutual funds or anything. We actually build our own funds. So you can think of them as your own private funds. A lot of advantages there, and so I like to keep people updated. We will do that tonight. All right, as far as the stock market goes here today, inflation. Yeah, I don't know if you saw that. Inflation, 7.9% is what the bulk CPI numbers or inflation numbers came out as. CPI is just the name that they give it, Core Consumer Price Index. And so those numbers came out, right? 7.9%. If you break it down, eating at home inflation is 8.6%. That's year over year, by the way, so compared to this time last year. Meat, poultry, fish, and eggs up 13%. Just give you some of the numbers here. We know gas is up 38%. That's what it came in as. I think we all recognize that. We've seen that one there. Apparel up 6%. New vehicles up 12%. Used cars and trucks up 41%. But I've got some good news for you here in just a moment. You've got tobacco 7% higher. Let's see some big numbers here. What do we got? Airline fares up 12%. The lowest was actually physician services. So going to the doctor only went up 0.5% relative to this time last year. Not too bad, right? So no complainings there. And so if we take a look at the stock market, I saw all sorts of reasons all over the place for why the stock market went up yesterday and really did a pretty good job today. I mean, it was down, but we're well off lows. And all it is mean reversion. That's it. So if we look over here, we talked about this mean reversion relative to the downtrend, and I've been saying, that's what you get, right? That the S&P, the Dow, and the Russell, we just have mean reversion going on, but you say anything that someone tells you, you go, give me proof, give me some data, show me what's going on. So here you go. Here is essentially the Russell 3000. We wanted to have the biggest group of stocks possible. What we're doing is known as a decile analysis, where we take the 3000 and we divide them into 10 groups so we could essentially pretend they're little portfolios. Now what we've done is we said, let's sort them in groups from the best performing stock or the worst performing stocks year to date all the way to the best performing stocks year to date. But then let's compare that to yesterday's performance. So over here, category 1, these are the worst stocks, meaning they're the furthest from their 52-week highs year to date. This grouping of stocks. Yesterday, they gained 5.92% as a portfolio. The second worst group of stocks year to date gained 4.97, and so on and so on and so on and so on. This is a perfect tier here, so it's very obvious to see that it's not that the stock market was shaking off the war and, oh my gosh, commodity prices coming down, and that's good news. No, it was that money was going to the discounted areas. It was mean reversion. Stocks that had fallen too much were getting the attention, seen as a discount maybe, and now you have proof of that. This is the performance of yesterday. Stocks that had the worst year-to-date performance, second worst, third worst, and so on. Now we've got that there. The key to this is the further they are away from their 52-week highs, of course, they rallied back there. These types of rallies and declines are actually very normal. The key to it is how they hold up afterwards. That's the big key. So if we look over to the S&P 500, taking this as a group, great. If it reverts back to the mean a little bit, what happens right after that? Does the momentum continue, or do we sort of peter out and volume dies off again? That's what we'll be following here, so we'll keep an eye on that. All right, if you look at the NASDAQ, so same thing, reversion to the mean is what's happening here, a steeper downtrend. So this is the first where we'll be able to see Is there any excitement to the upside? Will this just sort of peter out here and become nothing? Or will it actually turn into more momentum and more excited bulls wanting to buy that bottom there? So you had a lot of excitement there. You just had some trouble today. Aside from Amazon, which was higher because of the split, I'll talk about that in a second, you had some trouble trying to get Microsoft higher on the day. Adobe was another one, just couldn't get anything going. Apple, 2% loss, yeah, about 3% loss there. And none of those participated, and you need those to participate in order to get the S&P and the NASDAQ to move higher. Without them, you really have nothing to speak of, right? Even semiconductors. We're going to look at Micron, down 4.6% today, so underperforming. Actually, a lot of the semiconductors underperformed today relative to the NASDAQ and the S&P. They didn't want to play. That doesn't mean that tomorrow they won't show up, but for right now, they didn't want to play, and that's why the market couldn't just get anything going towards the end of the day there, although it tried. The Dow was the closest to going positive, only lost 0.25% on the day. Mean reversion, it's the same thing going on there. And the Russell, I would say the same concept, but we have an obvious sort of inflection point in the Russell 2000. So that one's a little bit more obvious than the rest of the markets there. If you're looking at the price of gold, gold continued to pull back off of its highs. However, it did have a good day today. Oil did the same, but it did not have a good day. So oil very quickly reverting to the mean. It's just the opposite way of looking at it there. Bitcoin also, I saw the Biden administration put out something that they're looking into. He signed an executive order, or he's going to sign an executive order on looking into cryptocurrencies and, you know, the pros and cons, essentially. They're supposedly going to take a fair look at it. And I'm not really a crypto guy, but I think all of us could answer this question. If you want crypto to be part of the future as far as a currency is concerned, stop taxing it like an asset. It's as simple as that. There's no other way to look at it. It will not be anything mainstream in the USA until the IRS says, okay, we'll count it as a currency. It is not going to be taxed as an asset. Until then, using crypto as a currency is the worst possible thing you can do on the planet because of the way it's taxed. No other opinions about it. It just doesn't make any sense. I've gone over that numerous times there. There's no argument. It's the worst, least efficient thing that you can use at the moment. Fun trading vehicle. And that's a lot of fun. You can speculate, you can invest for the long term and all that great stuff. The real excitement doesn't happen until they stop taxing it like an asset. So that's why Janet Yellen was against it. She doesn't want to do that. But that's the solution. So hopefully if you're a crypto person, you find that they take a look at it, they go, fine, yeah, we're going to work with this, it's all good, you can use it, and turns out we won't tax it like an asset anymore if you want to buy something with your crypto versus buying it with a dollar. I hope that to be the case. We'll see what happens. All right, crude oil, like I said, was pulling back there. It's recovering from its worst day in a while. That was a horrible day. I don't know if you saw that down move. About 10% of it happened in just a couple minutes there, so a pretty wild one there. Now, production is the key. I keep seeing everywhere. There are literally people driving around with flags and stickers on the backs of their cars saying, produce more oil. Come on, Biden, produce more oil and all that stuff. And you had Jen Psaki say this the other day.
Well, 90% of them happen on private lands, as I'm sure you know, and there are 9,000 unused approved drilling permits. So I would suggest you ask the oil companies why they're not using those if there's a desire to drill more.
So, okay, that's one thing. Now, you make that argument that go out there and start drilling. They have all these permits and the ability to do that. And she even referenced the fact that the production of oil is actually higher than Trump's first year in office. Okay, cool. The problem is we have a lot more demand for that right now. So she says, why don't you just go ask the oil companies in sort of a snarky way, right? I mean, she was putting back the question to whoever asked it, saying you should go ask them. They have the ability to. Why don't they want to? Well, to bring this back to the markets, the CEOs of almost every single one of the oil drilling companies that are out there, large and small, besides ExxonMobil, said, we'd love to. We would love to start drilling more, but think about how this works. They have to spend hundreds of millions of dollars to start drilling more here in the U.S. Okay, fine. They're going to make a large profit. That's great. Let them do it, right? But they're worried that if they start spending this money, they call it CapEx, or you'll hear so-and-so's not doing anything or cutting their CapEx for 2022. They're worried about drilling for more, and this is their words, not mine, because they start spending this money, all of a sudden the Democrats may win, let's say they win in the midterm elections there, take full control, House, Senate, and the White House, and then they change their mind and they say, well, no, we want clean energy. Well, they're not going to get reimbursed for all that money that they spent on projects that are now shut down. So you can get political about it, but if you were the owner, or not the owner, if you were the president, CEO, or even a board member of one of these big oil companies, you would be saying the same thing. Well, hey, what if we spend all this money, come to find out they sort of, regulate the devil out of us, they don't let us drill. So they've all said that. So that's the key. There has to be some promises there, which could really, really help drive down the cost of oil if the White House, or if, just basically them in general, would say, I tell you what, if you drill, we're not going to bug you for 5 years or something like that. That's what they're waiting for, and that's what they're negotiating on right now, or at least attempting to negotiate on, so that they can spend that money. In the meantime, energy stocks are paying higher and higher dividends. Why? Because if they're not doing anything, if they're not doing anything to grow their company, they have to give you back some of the money in dividends, otherwise you just go somewhere else, right? And if you go somewhere else, they lose their job, they don't get their private jets or big salaries and stuff. So put yourself in their shoes for a second. You may not like the fact that they're soaking up all this money by just selling oil at higher prices, but they're worried about investments, right? You'd be worried as well. So it's kind of a hot button topic in the finance world right now, because we want, as a citizen, you want lower gas prices. As an investor, you don't want to invest in a company if they spend a lot of money to drill, come to find out they can't reap the rewards of all the risk that they took. So that's the problem going on right now. It's tough. As an investor, you're like, get out there. As a citizen, you're like, come on, man, let's figure this out. So sometimes you got to disconnect from that and put the political emotion aside and just kind of look at the numbers there. I'm sure that will get you guys going in the comment section there, but I had to say it. That's because they don't say that on TV, but yet every CEO's out there like, happy to do it. We just need some reassurance from the White House that we won't get shut down if we start spending this money. That's a respectable question to ask. I don't blame them. All right, anyways, I promised you car price, good news there. Wholesale used car prices fell 1% week over week. That takes some time to trickle into the retail market, but that's the largest week over week decline since COVID started, which is good news there. The average decline for this week in particular, looking back 3 years prior to COVID, 2017, 2018, 2019, the average car price decline is a bit seasonal, but it's only 0.35%. We've fallen about 1%. So that's good news if you're out there looking to shop for a car, and gas prices staying high could continue to make that number even worse there. So we'll see what happens there. And a fun fact, I was playing around last night. If you get a $20,000 car loan, here's the advisor in me. If you get a $20,000 car loan and the interest rate goes from 5.5% to 7%, right, on your car, and let's say that's now what you have to pay from the bank there, it has the same impact as far as monthly payments go as a 10% increase in the price of the car. So paying a higher interest rate for the car at a lower price is the same as getting a lower interest rate with a 10% addition to the price of the car. So there's coming to be this sweet spot in there where now you can say it's a reasonable price for the car, and that's a reasonable interest rate to pay. We haven't seen that in a while. It's been a very awesome low interest rate, but the car prices have been ridiculous. This is happening, right? That's awesome. You like to hear that there. So thought I'd share that with you. All right, I rambled a little bit there. Let's go to new highs and new lows for the day. We've got 6 new highs officially. We've got 12 new lows. Let's take a look at a few things here because we're going to talk about them on our office trades tomorrow. We've been doing office trades besides missing Wednesday this week. Monday, Wednesday, Friday is our goal anyways. Kimberly-Clark, KMB, hit new lows today, starting to get extended. You see it there off to the side, so I put that on our watch list for tomorrow. ConAgra is the same, however, it's not a rolling sort of a extension there. It's more of a falling knife, fall off the side of a cliff sort of thing. Colgate Palmolive starting to roll away as well. That hit new 52-week lows. I want to point out that some financials did the same. Citigroup, Franklin Templeton here also hitting new lows. Maybe early. That may be just getting started on something, but for the moment, that's where you stand. And Chevron is one of the new highs for the day, which is unfortunate because we have a bigger position in this one here for the office trades to bet on the downside, but I like that it's extended. I think you see this one start to pull back, so happy to see that. Other than that, there's not a lot of new highs and new lows for the day, and that's been the case for the past couple days while things have been wiggling around. All right, stocks in the news. You probably saw, we talked about it yesterday, Amazon 20-for-1 stock split. The big excitement was the $10 billion share buyback that they're going to do at these prices here for share buyback for, they just, a new one. They just voted on it, right? So 10 billion bucks there, that'll get a stock moving there. Buybacks tend to move stocks a little bit higher there. And I think it's June or something is when they're going to, when that kicks in, June 3rd or something like that, when the stock price is going to split. Anyways, moving on, we got CrowdStrike here. They reported earnings better than expected, revenues better than expected. They raised guidance going forward. If you're familiar with the company, identity security, the growth in that category of their business, 18%. Cloud security added 8%. That was the main focus of their beat, and that's good news if you're playing along there. Peloton didn't get any movement off of this news. Wall Street Journal said that the company is considering monthly subscription plans, which would include the bike. So you could pay $100 a month, get the bike, and get into the classes because there's a separate subscription fee. And if you changed your mind and you canceled, they just come get the bike for you. They're testing it out here in Florida and Texas, I believe, as well, where they have actual stores. And so that's drawing a little bit of criticism because, all right, that's pretty cool, right? As a consumer, like $100, I could pedal my butt off. All right, that makes sense. But if I cancel in 2 months, that's it. So what about the people up north when it gets to be wintertime and they're at home and they're like, I'll just pedal at home. But then when it's not winter, they want to go pedal outside or to the gym or something. Would they not just send the bike back? That gets to be really expensive there, does it not? So that's one maybe reason why the stock was falling a bit lower. Wingstop. Yeah, Wingstop's company there. So this one's interesting. They're doing a $4 special dividend, and essentially they sold more shares, and then they're just going to take the proceeds, most of the proceeds from that, and pay out a special dividend. Now you could still participate, which is not normal. Usually these things happen and the record date is actually passed, so you can't participate. The record date's going to be March 24th, and then they're going to pay you on April 7th, right? So you could technically get the $4 dividend in there if you're trying to get that, and they're going to be paying it, so good for them. General Electric said they had a investor day, so a handful of stocks did that this week. I think Disney was one last week. And they basically said all the guidance that Wall Street has expected for us, all the earnings and everything, we think that's going to happen. We're going to be able to hit those numbers. And so the stock recovered nicely off of a gap down this morning, and not too bad. Lastly, and I'll let the stream catch up there so I can take your questions if you have any. Tomorrow's AT&T's Analyst Day. I don't know why that just hit me, but that's what's going on there. COVID, right? Heads up. Right? We watch COVID cases every single day. The 7-day average of cases in Eastern Asia, South Korea, and Germany, and somewhere else, are spiking higher again. Right? And that's a little bit of what happened last time. I think France and the UK were the first. The bad news is France and UK, their 7-day average is turning back up. So you have the bigger spike happening in Eastern Asia, South Korea, and Germany, in terms of the cases per day, using a 7-day average there. In the UK and France, that 7-day average is starting to tick up again. I hope that does not start to spread again. Of course, nobody wants that, but that caught my eye this morning because we have not seen that too much since Omicron started driving us, going away, which is good news there. But we will see. Questions that you have there. You also know that these companies don't want to overextend themselves the next pandemic to happen right when they do. I mean, obviously that's a concern too, and these are, I just worry about people starting to get mad at oil companies and they're trying to push the blame towards them. And it's like, I'm a little salty by that. You know what I mean? Like, have we lost common sense? Like, which one of you or whoever's mad, would you do that? Right? That's like saying start an air conditioning company to buy 10,000 air conditioning units, and you can install them little by little, but there's a chance that after November we may say we want you to use a different air conditioning unit. But please, we need air conditioning units. Go buy them now. Right? You can translate that to any business you have. There's not a chance, and that any of us would do that. So they need some kind of reassurance that what projects they start can extend the life of the cycle or something, at least. Give them something. Yeah. Anyways, and that's what I go back to when I say raise money when you can, not when you have to, because that's what companies do. Same thing. Invest money when there's at least a light at the end of the tunnel. Risk is fine, but when you can be shut down at a moment's notice, that's different. You know what I mean? And then to give them a little bit of grief, I couldn't help but notice that gas was $4.39 because oil went up 12%, but now it's down 12%. They didn't lower the price. So I'm just, I'm taking both sides here. Like, why is the price the same? The price, you moved it up real quick. They don't move it down. But again, if you were running that, you would probably do the same, Oh, Harry's got it there. You might feel different as they begin gouging us there. Yeah, there's a little bit of that going on, right? Yeah, I see it. We all know. Giovanni's got his 3 shares of Tesla at $600. You bought them at 600. You want to sell one to buy more PayPal. People say PayPal is undervalued. I'd agree that PayPal is undervalued. You're saying essentially take a profit to put into some shares there. What's the? I don't know what the argument would be. I mean, if you want to add more shares to PayPal, I like the idea that you're taking some profit off the table there. Yeah. Why not? Andres, the SPY is below 400 and still bearish, or above 430 and getting bullish by the end of the month. Oh, like you're saying what happens there. Well, so we've got, 20 calendar days left? So if you look over here at the chart, you would expect the mean reversion to continue to some degree. Very bad sign if it doesn't, but you'd expect it to continue to some degree, and maybe if we chop around for 10 or 15 days, that'd take you to the end of the month. So I don't know about a severe rally to take you to the end of the month. Now you said 430, so 430 is not out of the question. That's 1.5 good days for the S&P, just having normal average good days there. So yeah, I don't know about that. That's not a problem. Google and Amazon split. You think this will start a larger split trend? No, I think it's because Amazon ultimately wants to be in the Dow. I mentioned that when Alphabet split. They're not. They say they're doing it so that employees can make better financial decisions with the shares that they own. All right, that's fine. But employees can also have fractional shares. So the price of the stock has been irrelevant for like the last decade, as far as if you want to buy a fraction of a share. So that, I think it's basically just the Dow. They're going to get themselves into the Dow. They're going to have, everybody that owns Dow funds is going to have to buy them. That's the transition they're hoping to make there. Yeah. Go to Europe. Quickly see U.S. oil companies are not. I don't know. Not in Europe. Couldn't say. My argument today is based on drilling in the U.S. though. So I'm not. What they do overseas, beats me. ExxonMobil. How high does it go? Don't you kind of feel like you've reached a high here in the short term? I mean, oil prices would really have to take off in the short term, no? If the U.S. was simply energy independent and Trump was president, no war, high gas prices, well, there's, everybody's got their political view. I'm just saying, let's strip that out for a second. Let's put the emotions off to the side and try to relate to what Washington wants to accomplish and what oil companies want to accomplish. There's something there. They have to have, they got to get in a room, sit down and talk, right? That's all it is. And I hope that happens. I don't care who the president is. I hope that happens and we can get towards that, because clearly this is a big light shining on a potential issue that is not going anywhere anytime soon. What's the difference between consumer discretionary stocks and consumer staple stocks? Well, it's kind of simple. So think of consumer staple stocks as stuff that you would buy anyways, and you don't really care where the economy's at. So you could argue tobacco, alcohol, toiletries, lotions and potions and all that stuff that you would normally use on a day-to-day basis, your toothpaste, companies that make certain food items, milk and things, you're going to buy it. Consumer discretionary is things like going shopping on Amazon. You don't necessarily need to buy new washers and dryers. You don't necessarily need to buy fun toys, new iPhones, things like that. So you would be likely to make a decision based on the economy, whereas consumer staples, you're just going to buy it anyway. You're not going to stop drinking soda because the economy's in the crapper. You're going to be like, I want my soda. At least I would. Yeah, right. Curious cyclist. I don't know why I was trying to say cyclicus there. Basically, do we look at those fundamentals on a lot of different companies? We do. I don't get into the weeds with a lot of them because it's more important to me how the fundamentals fit into a portfolio. Remember, we're not stock pickers. we're portfolio builders. So it's fine to say this company's killing it over here and this company's a little bit of a gamble. If those two can work together in a portfolio, I'm happy to look past certain temporary struggles. Not like a Peloton or anything, but get what I'm saying. You're looking for April to be a good month. There you go. I knew that comment today about those oil companies to get you going. What's the outlook for small caps? You're going to notice the media. Well, if the dollar stays strong, you're going to notice the media focusing more and more on winners, the stocks that are leading small caps. A dollar being strong is better for small cap, sort of national, local, what do you say, U.S. companies. A strong dollar is not the best for companies that do the majority of their sales overseas. So you're going to see that to be more of a comment there. And the dollar doesn't show any sign of letting up, so I would assume that small caps will be just fine. Jerry, lotions and potions. I get that from my good friend Carolyn. Talks about lotions and potions all the time. Yep. You think we're going into a period of stagflation? Very possible. That creeps up here and there, people asking that question. I think it's very, very possible because we really need an extreme amount of growth at this point, and we haven't seen it. Like what's moved this entire stock market higher, if you're going to say it's based on growth, it hasn't really been the best of growth. I mean, you're talking 2 and 3% at times, or less than 3% at times. That's not going to move the needle, right? Look at what China did. Even if you don't believe the numbers, I mean, still a different growth level there. Anything can bring the SPY below 400. Yeah, absolutely. Yep. And I worry that it's going to be the capture, assassination, whatever it may be, of President Zelensky, because he's being a little tough guy out there. If he goes down, I think that's pretty negative for our stock market. So I kind of would like for my own selfish reasons, and it seems like he's a nice guy. I don't know, I don't follow it, but it seems like it'd be best for all of us if he just maybe went somewhere, or maybe he's faking it. Maybe he shows up, makes a video, and runs away. I don't know, but I worry about that guy. Classes open to the public or just clients? Occasionally we do it open to the public. Tonight will be clients only because we're talking about specific positions, changes, purchases, sales, adjustments, and we're not allowed to do that to the public, because if I make a recommendation, I get in a lot of trouble. So I can only do that for clients. Yeah. There you go. I love it, man. That's cool. Look, everybody, like, what's happening with the war, it's like, I mean, nobody wants to see that, but you got good and bad on both sides there. I'm just not one to follow along. I follow the drama just because it's on TV, but not my thing. When it starts to touch the money, that's how I'm always looking at it. Like, what happens if X happens or X happens? That's where I stand. Yeah. Oh, the bank stocks paying 2 to 3% dividends. Are they a good buy at the discounted prices, JPM or Bank of America? I think it's a stock picker's market for the bank stocks there. Remember what happened today. Goldman Sachs closed up shop in Russia. You got a little bit of that to come, right? So what about the others? What starts happening with some of these? Is that a drag in the short term? Do you worry about that being a drag in the short term? The dividend's great, but how quickly they can fall. You see how quickly they can fall, that 2 or 3%. So I'd be more of a stock picker there, or a position builder. Nothing wrong with starting a position because something hit a new low or whatever, but no reason to go all in. I take that stance for the entire market right now. It's a great discount. There is no reason to be gung-ho about today's the day, let's just go all in. You don't need a gas guzzler when there's Tesla. That's the problem, though. We can't all drive Teslas. We can't all drive electric cars. There has to be, for anything that we do. Remember, some of you are old enough, the ethanol craze, everybody was going to use ethanol. And then the corn farmers were like, wait a minute, this is not mathematically possible. It's not mathematically possible that everything is run on a battery. It's just not. Yet. Maybe that changes. I don't know. So there has to be a combination with the incentive to move towards electric or anything that hydrogen or whatever comes up. But there can't be a forced push. You can't stop telling oil companies to do what they do because you want to make a push. It has to be a transition. It's a long transition. I worry that we've lost the thought of common sense in Washington at times, because I'm all for it. Let's move. Those cars are cool. It makes sense to me. The more people that buy them, the cheaper they get. But we can't all go over there at the same time, you know? You can't all go to Disney World on the same day. We all may want to, but we can't all go to Disney World on the same day. I've been there when a lot of people have tried to go, and it was not a good time. So let's all have a good time and just space out when we go. Yeah, you got it. Build some positions. Yep. Oh, man. I love getting you guys going, man. I thought today was for sure. I was a little salty today because I kept seeing on TV, would you tell the oil companies to drill? And I'm like, they're talking to you. They're in the media. They're out there. They're doing interviews saying, we're willing to do it. Just prove to us you won't shut us down. Who's not hearing this? Oh, good times, right? All right. Got you fired up. You guys go out there, have a good time, and we'll be back to, we won't be back tomorrow, but we'll be back on Monday to do this all over again. I will see you guys later in Wine and Wealth. Got some prep to do to make sure I've got everything clean and clear to show you. You want to see some of the changes that we've made, our biggest changes in a while, actually, to our large cap fund. Come join us in a Wine and Wealth class. We'll be following this up with changes to our other funds as well, but we'll try to do that tonight and experiment with a way to show you some data. And I'll see you guys later. Enjoy your day.